Let's get back to these markets, as John's just reporting. Not a lot happening out there, but we want to check in with Ben Way. He's head of Macquarie Asset Management, joining us on site here. Ben, thanks so much for joining us here. Wild ride in 2025 for these markets. We had that jolt, that volatility in the beginning of the year. Markets took a big step back, but they've come roaring back since then. How are you guys positioned for the end of 25 going into 26?
Yeah, we feel we're positioned well. I think, for us, we're investors through cycles. So, we know the markets go up, we know the markets go down. The vast majority of what we do are in the private markets, and they're in long-dated assets, things like infrastructure, agriculture, energy transition. And so, look, the opportunity sets are still massive. And I think the public markets are a reflection of that, right? We've had a lot of events over the last 5 years. We've had a lot of crises. We've sort of got used to volatility, but I think people know where the world's going. It's digitizing. It's looking for more sources of energy. People are talking more about supply chain security, sovereignty, security, and that's creating up big opportunity sets that will stand the test of time. And I think a lot of the companies that are leading the markets are companies that are reflective of those thematics. And so they're the sorts of things we do. And so we think actually investment opportunities are picking up, the M&A markets are picking up, and I think generally people are very cautiously optimistic about sort of the next 6 to 12 months.
Cautiously optimistic, but then you look at the public markets and it's like optimism times 20 because you've got record highs, certainly here in the U.S. Yeah. What kind of correlation is there between the public market cycle and the private markets where you mostly hold your money? Yeah.
So there's not a huge correlation, to be honest, other than those public markets that are doing, those public market companies that are doing particularly well are normally reflective of big thematics where private markets is investing, and often, one way to exit that opportunity over time is into those public markets. So I think just as the best companies that perhaps have got the most exuberance are reflective of sort of those global thematics, that's where private market investors are seeking to invest, and that will be in areas that are some way related to AI, some related to tech, some way related to supply chain security or national security.
One of the great, amazing growth stories in global Wall Street, I think really since the last 15, 20 years, has been private credit. How do you guys think about private credit? How are you positioned for private credit? What's your view?
So we think private credit has a long way to go. When you think about it, what it is as a percentage of the overall lending market, the fact that we've had regulations which around the world, not just here in the US, but around the world, which has had some banks step back from lending, and the fact that there's just all these great investment thematics that need both equity and debt, we think there's a long way to go for private credit in pretty much all the major investing markets around the world. So I think we're at the beginning of this journey. Private credit obviously gets affected by things like interest rates and interest rate cuts. It also gets affected by the deployment of capital and whether there is a lot of assets being deployed where you've got new businesses to finance or refinancing of businesses. So it won't be a linear journey for private credit, but the opportunity set, I think, still remains very significant, particularly when you think of the overall lending market and how small a percentage it is today.
Yeah, when it comes to private credit, there's a ton of demand, but not a whole lot of supply. And the worry is that there may be some kind of bubble forming, or we're getting a little bit bubblicious. What would make you worried about private credit? Are there certain sectors that are perhaps more vulnerable than others?
I think, if you look at something like real estate, I think that's where some of the concern has been around, where you're coming up to a series of refinancings, and we need to take a really hard look at the valuation of those properties. And, some facilities that, were put in place, are they reflective of the value of that business today? So I think if you start to see that happening beyond just episodically, then people will start to get concerned. Personally, I think, private credit, the private credit managers out there like ourselves have often been doing this for a long period of time, going back 20 years. Most private credit, asset managers who have significant assets have very good track records. They've made a lot of underwrites with very few zeros. So I think you've got, pretty seasoned people who really understand that market, and them being able to have access to more capital now because investors want that exposure, I think is a good thing, because you've got smart people with a good track record and you've got a big opportunity set, out there. And so that makes sense.
About the energy transition, took a little bit of a blow yesterday from the president's speech in front of the United Nations. Talk to us about kind of the environment you see out there for financing the energy transition on the global scale.
So I think the best way to think about it is this. 3 years ago, the world invested about $1 trillion in energy transition, and this year it'll be about $2 trillion. So the investment in this sector around the world continues, and it continues to be very strong. Energy transition or decarbonisation is more than just offshore wind. Mm-hmm. I think we'll all acknowledge that offshore wind has some headwinds at the moment, so to speak. But there is a myriad of other sectors and portfolio companies out there that are doing really important things around the world where, again, the investment opportunity remains very significant. If you think about sort of businesses like Desiree and Calibrant, who are two of our portfolio companies, they're investing heavily in battery and storage technology. They're providing solutions to a lot of the big tech companies. Where you've got grid challenges, where you've got access to energy challenges, battery storage is a really important and scale opportunity, and that's starting to be rolled out with corporate partners through corporate PPAs, not just here in the Americas, but right around the world. So, when we look at the energy transition, we just see, first of all, a huge need for more energy around the world, and solar is the cheapest unit of investable and deployable energy today. So there's obviously a lot of markets that need just more energy. They want to diversify their energy mix, and they want to do it at a low cost. And in a lot of countries, they want that to be a green solution. So you've got that. And then you've got all these other new technologies, whether it's supporting EV networks, whether it's different sorts of aviation, low carbon fuels, or things like the storage and capture, which are just enormous.
So not to make it all about the U.S., but to bring it back to the U.S., does the U.S. checking out of the whole energy transition narrative create more opportunities or more obstacles for Macquarie?
So I think, first of all, there are immense opportunities right across the US. This is the biggest energy transition market in the world, and I think we need to remember that. Second of all, governments from time to time change their policies or viewpoints, and we're respectful of that. So we'll operate within that policy framework and within that agenda, but it's pretty clear that corporations right across the US are looking for advanced technologies that help their businesses run better, do it in a less carbon-intensive way, or come up with energy storage solutions. And so given the scale of this market, that just remains a huge opportunity here.
All right, Ben, thank you so much for joining us today here at the Bloomberg Global Forum. Ben Way is head of Macquarie Asset Management.